Hey everybody, we're getting ready to trade May, week 2, 2020, taking a look at the S&P 500, and here is our simplified daily chart. This chart is good for the ES trader or for the option trader who's buying way out in time, maybe just using the monthlies or going out a couple of months from here, and for the person who just wants to see the big overview. This is not the place to look at it, see me point to a level that's way down here, and then start buying Monday expiration puts, thinking that we're going to get here that quickly. This is just to sort of give you a realistic time frame of how long it takes to get to and from somewhere on the S&P 500. And you can also take anything that I say about the S&P 500 back to your individual daily stock charts and look for the same kinds of gaps and moves against simple moving averages that you're seeing happen here on the S&P and take it back to your individual stocks. And I bet the same things align there, so you can use this as your benchmark and take it to trade anything else as well. Okay, so here is our daily chart. You can see that our move took us up to almost fill this big gap overhead here that would have filled completely at 29.72. We only got about 3/4 of the way up there to 29.54, and then we rolled over on April 30th and May 1st, as you can see, and sold off back down. We have left a big gap in our wake that started at the beginning of April when we gapped up open here between April 5th and 6th or so. And that gap would fill at 24.88. But there's a lot of stuff in our wake that we have to get through and that we could chop around at a lot in order to get down here. But I do think that is a mirror image move to what we saw happen here, where we traded up about 3/4 of the way into this gap. Maybe we're going to come in and go about 3/4 of the way down here into this gap before reversing and going back up. And there is plenty of more stuff that we could be trading. I'm pointing over here to the left side of this chart right now. You can see here's where this gap would have filled at 29.72. There's another gap that would fill just above that, and another gap that would fill just above there as well. And then, of course, we get into the ultimate gap all the way up here that's close to the all-time high. So there are plenty of things that we could be trading for to the upside, but maybe what we've got to do is come down here first and take a crack at trying to fill this gap, mirroring this move before reversing back up. And I do not think this is something that's going to happen by Monday or Tuesday of this week. I think this is something that's probably going to take over the course of the month to get there. And this is why. So let's take a look at the daily roadmap chart, which gives you much more detailed information. And this is for the person who is trading the Friday expirations, the weekly Friday expirations, or person who likes to take this information and trade Monday and Wednesday. I try my best never to trade those, but some people have success with that. I have found over time that those are for suckers. You should stick with the Friday expirations at minimum. But anyway, that's what you use this chart for, because you need flawless entry and exit, and you need to look and see what happened the last time we got to some of these key levels and simple moving averages and realize that the same thing could happen again. Okay, so here we are. Here was Thursday's gap down, leaving a little gap to the Q2 and April closing high, and then another gap down on Friday. So we've got two little gaps. We got a little gap and a somewhat bigger gap here between Thursday and Friday. And then, of course, at the end of the day, we broke down through the 10-day simple moving average. We set our low. We tried to recover the previous week's close at 28.36 and the 10-day simple moving average at the end of the day, but it didn't work. Maybe some people were, thinking, maybe we held up here to begin with, just in case Warren Buffett was to come in over the weekend with his Berkshire Hathaway annual shareholder meeting that was happening virtually. And he did it with PowerPoint slides, I guess. And they were posted all over the place on Saturday morning on Twitter. And he was not that jolly and he was not that cheerful. So it does look like, I would say, I would not be surprised at all to see us gap down futures on Sunday night and maybe a wind up opening down here with a test of the 20-day simple moving average and sort of a repeat performance to what happened on Friday. So you would have a big gap down open and maybe be looking below the 20-day and play a game at the end of the day where we try and close back above the 20-day but close back below it. And here's where the 20-day is. It's right in line with this key 27.92 level, which is the 2020 halfway back. That's the midpoint between our all-time high at 33.93 and our 2020 low that happened in March at 21.91. So the midway point on that is 27.92, and our 20-day simple moving average is right there as well. Okay, so if this is not enough to feed the beast, then we're going to head down a little lower and we're going to be testing next the 50-day simple moving average, which just happens to sit in this gap that was left in our wake back during April week 3 to April week 4. And that gap fills at 27.30. 23 level. This is where the April week 3 and the April week 4 lows were both at. So we've already twice tested this on a weekly time frame and bounced off this level. Maybe that's the most that we're going to get this round of selling for now before we go back up and try and test and chop around 27.11 and the 27.01 levels. 27.11 is a huge edge level for us. If you've been with me for a while, you know where that comes from. It originated on March 13th. You can go back to the daily chart yourself and see the carnage that happened after this high was touched, and then we rolled over into our March low from there. Just below that is where our April and Q2 halfway back is at. And if we break down below 2,700, then we get into the 200-week simple moving average area. And this has been a long-standing, big, huge line in the sand for us. There are other videos about this. This holding or breaking or holding really is more important on a Friday when we close the week because the weekly simple moving average. But intraday or intra-week, we can always see a lot of chopping going on back and forth at wherever this level happens to be. And when we look to the left on the roadmap chart here in close-up, you can see that the 6th of April, we closed on right around that 200-week simple moving average level. Then the next day, we sold off and closed down, but still held it. And then the following day, we held a low of day on that. And from there, embarked our rally that took us up to take out the 50-day. So if we come back around here and we hold here for a while, it might take us a couple of weeks to break this level, or we might not ever break this level, and we might not ever get down in here to fill this gap. Okay, so just be aware that that's there, and of course I'll be talking about it and tweeting about it if and when we get there. Okay, so I hope this helped you kind of figure out where we are at right now and gives you a good start to the week already on May week 2, 2020. Have a great rest of your Sunday. As always, good luck and good trading.